good day. I just wanted to make a video for what I'm looking for the week ahead. So I was going to begin with the interest rates differentials and move to the COT data, but I've already covered that a few videos ago. If you haven't seen the video, I'm going to probably link it on this one's description. But of course, as always, I will start with the seasonal tendency for the dollar index. So taking a look at the dollar index, right? Of course, you can see there on the left we have the 33-year average, the 15-year average, and the 5-year average, which most of the time seem to follow each other. Well, of course, towards the end of the year we see a different story where these two averages are moving down while this is moving higher, but we'll get to that later. So we can see that September moving to October seemed to make the low of the dollar throughout the year, and from mid-October we seem to see a rally, especially till the middle of November on all three averages. So I'm expecting much higher prices in the next coming weeks after this little dip down, and November to December potentially making the high of the year on the dollar index, which we'll get to in a moment, but I wanted to first start off here. And we'll compare this to another seasonal tendency chart. Of course, this is from Morrow Research Center, which I did say they have one of the best seasonal tendency charts. But I'm going to compare it with equity clock in a moment. Looking at the other seasonal tendency charts from equityclock.com, we can see that in the month of September we have a dip in the first about 3 weeks of the month, and then a rally from there. Of course, another dip in October, then a rally till late November. So one thing seems to be in common with both of them: we get a high in the month of November. So that's one uniform thing I can say with the both of them. But in the month of September, according to this chart, we see a dip down till about, let's say, mid-September, a rally higher, another dip in mid-October, then a rally from there until December. So let's compare this side by side. Looking at the both of them, we can see that in the month of September we did get a drop. According to this one, we get a rise from the middle of September. And even on this chart, looking at the 15-year average, the red dotted chart, we can see we get a drop towards the middle and late September, then a push higher, another drop in October, then a push higher from there. Of course, this might be exaggerated. It's not something you follow till the T. Of course, the chart is the one that guides you even more. But fundamentally, or should I say seasonally, we expect higher dollar prices until November. Then from the middle of November we can see lower prices from there. Let's see what this translates to on the chart. So as always, we can go through a quick top-down analysis. Let's start with the 3 months chart. We can see that the same levels I've had on my chart for the past couple months are still outlined. We have the buy side liquidity, which is not the all-time high for the dollar index, but it's a close buy side liquidity sitting there. We of course have sell side liquidity there. We also have internal sell side liquidity, and we've got this BC residing at these lows. And then here, instead of this, actually starting off with this piece of the price action, we were, for the last 1 year, I believe, yes, since this is the beginning of the year, from the beginning of the year till now, we were essentially inside of this buy side imbalance. From this candlestick's high to this candlestick's low, we were sitting inside of this buy side imbalance. And if you were bearish, you would have expected price to close below this buy side imbalance right here, to close below it and possibly support lower prices. But we are still set inside of it, and we just finally broke out. We haven't closed above it yet, but we've broken out of it. And I think this candlestick is closing at the end of this quarter of the year. Moving on to the monthly chart, of course, we have this sell side imbalance residing here that has been the drawing liquidity for so long for me, and we have the dotted line being the consequent encroachment of the sell side imbalance. So of course, as we know, price rejected from this buy side imbalance, this BC. We still don't have any candlesticks sitting inside of this. We have no candlestick closure inside of the BC, and it's just been tapping and finally went deeper than the consequent encroachment, and actually went to the lower quarter, the lower 25% of it, before finally rejecting higher month after month after month. So being the third month, we have finally broken higher from where we were, and this actually is a good sign for us being bullish. We assume or expect that November will be one of the strongest months, one of the most bullish months in the dollar index. So let's just say, let's for a second take this, because this is the month of September. This could be the month of October, let's say, and then we have this as the month of November, and then finally this as the month of December. So what I expect price to do now is, this being September, I expect October to also be bullish. I expect October to actually close above where we are in the month of in this month that we're in right now, in the month of September. So yeah, if only I can get this right. So I'd like to see something like so, assuming that this candle closes where it is right now, or assuming that we close as we enter inside of the monthly CB, the monthly sell side imbalance, then I would like to see November to be the one to take us inside of this sell side imbalance properly, potentially into the 25% zone, and then December to be the one to tap around the consequent encroachment and probably higher than that. But after tapping it, I expect December to bring lower prices. So I would like to see if we could trade higher into it, going from November to December, and then drop from there. So December, I would like to see it to be a bearish candlestick. So despite all, I would like to see the technicals have to align for that to be the case. Going to the weekly chart, the one chart I spend the most of my time on, and I recommend everybody spends the most of the time on, we can see that we've had so many consecutive bullish days, bullish weeks actually, because this is a weekly chart, consecutive bullish weeks from the 17th of July. So we've got 1, 2, 3, 4, 5, 6, 7, 8 weeks that we were bullish week after week after week. I don't even remember the last time we were bullish that many weeks in a row, or even bearish that many weeks in a row. Even at this portion of price action, I think it was 1, 2, 3, 4, 5 before we saw a bullish week, then continued. So we've managed to actually pull off 1, 2, 3, 4, 5, 6, 7, 8 without any red candlestick, without any bearish week. So I personally would like to see if the bearish tendency that we noticed from the seasonal tendency charts earlier, if of course you don't remember what the chart looks like, just scroll back 18 minutes, 8 minutes before this point, and you notice that we were falling from the beginning of September. So I want to see if this week, the second week of September, and possibly the third week of September, bring in lower prices in the dollar before we continue reaching for buy side liquidity. Because if we're going to stick on this weekly chart, we can clearly see that the next buy side liquidity is this high, which is the target, the monthly sell side imbalance. So I think now that we've taken out buy side liquidity, I'm expecting price to trade to certain lower PDRAs. Of course, overall, I'm still bullish. If I had a wide stop loss, I could potentially buy this right now, wherever it is, without looking for any discount PDRAs, aiming for this CB and possibly putting my stop loss at this low, knowing that we are very not likely to get to these lows. But that's not the type of trader I am. So the PDRAs I'll be paying more attention to the consequent encroachment of this very long tail, which is the 103.562 level. Let's plot that out now. I always just use the coordinate to make sure that I get the correct point. Then we can remove the Fibonacci and pay attention to this level. So going into next week, I'll definitely be looking at this, the tail of this the tail of this previous week's candle. Of course, I don't believe, or I wouldn't like to see us trade lower than the low of this candle, because we respected a weekly buy side imbalance, which is a bullish PDRA for higher prices. So I don't want to see us take out this low. Once we've taken out this low and closed below it, my bullish sentiment might change, at least for the short term, because I might be looking at this imbalance sitting here, and yeah, we might be looking for this for this balanced price range, because it's not just a BC, it's also a CB on the left of it, so it's a BPR, a balanced price range. If we close below this, which I don't want to see us do, so I would like to see how we treat the consequent encroachment of this tail, and we may trade to this sell side imbalance from this candlestick's low to this candlestick's high. It's a sell side imbalance pulled over time. We may use it as support to push higher. We may see it used as support, but I'm mainly looking at the consequent encroachment of this tail. Going down to the daily chart, we can see Friday attempted to close bullish but was not strong enough, and this might be indicative of lower prices. Of course, there is no reason for us to trade this low, but that's where I'm looking at for the next 2 weeks of the month. So I'm expecting the ending of November to continue rallying up, but going into this week we may see a bit of retracement. First area that I'm looking at, of course, is this buy side imbalance. Let's delete this buy side liquidity level that we don't need anymore, and of course we also purged this buy side. So I'm looking closely at this daily buy side imbalance. Another level I'm looking at, another discount level I'm looking at, is this balance price range residing here, which is a fair value gap in the form of a CB from this candlestick's low to this candlestick's high, which also has a volume imbalance. I know came from a new day opening gap. From going from Monday to Tuesday, we had a new day opening gap that's now creating a volume imbalance there. So we have that along with our sell side imbalance here. Moving to the right of it, we also have a buy side imbalance. So I'm going to use this as an inversion fair value gap from a daily perspective. So these are the three main discount arrays I'm paying attention to going into next week. This inversion fair value gap, which I believe could be easily tapped, especially considering that we have CPI coming up. We also have this buy side imbalance, which we could see price just tap on it and go from there. We may not even go as far down as the tail, the consequent encroachment of the weekly tail, or even this. But one level that I'm sure, or I would not like to see us trade below, is this, the tail's low, the low of the tail, which is the one that respected the weekly PC. So let's delete this. So that's what I'm looking for going to the week ahead. Of course, we have the daily volume imbalance, which also came from a new day opening gap on the 9th of March 2023. We are looking at that now. So I think if I was to predict where price would go to next, I believe Monday is going to open up, tap into this inefficiency, this volume imbalance, retrace on Tuesday and Wednesday. So Wednesday being CPI, I believe would make the low of the week. I'm not sure at what level it's going to do that, but I'm paying attention to this 1, 2, and 3 levels. If I was to rate which level I think it's most likely to get to, it's this one, around the 103.8183 level inside of this inversion fair value gap. This is where I would like to see us reject perfectly from. I don't even want to see this level touched, but here I would like to see us tap into it and continue higher for the rest of the year, essentially until November. So that's what I'm looking for. Of course, this is our drawing liquidity up here. I just did not make the illustrations visible on a daily chart, but it's just above this buy side liquidity on a daily, above here. So that's what I'm looking for going to the week ahead. If we're going to have a bearish week, then I think Tuesday might make the high of week in this inefficiency, in this volume imbalance, and then the rest of the week might be bearish until we get to any of these three levels of inefficiencies before next week continues the higher price in the dollar. So going into the week ahead, I'm not going to be looking at I'm probably not going to pay as much attention to the indices as I will with the currencies, because the indices has not directly been correlated with the dollar index. Of course, we saw how the dollar has been bullish for the past few weeks, but looking at S&P, for example, looking at ES, we can see that we're bearish 1 to 3 weeks and then decided to be bullish for some reason in these 2 weeks, and now we are attempting to be bearish again. So that makes me feel not too confident, not too comfortable trading it either. Of course, we're still respecting PDRAs, but it makes trading the indices using the dollar as a correlation a bit difficult. So I don't know if I'll be trading the indices as aggressively as I will with the currencies, because of course, looking at this, we can see we're bearish, 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 and then bullish, bullish, bearish. The Nasdaq, same thing, bearish, 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 bullish, bullish, bearish. But when we go to the euro, for example, it's just been bearish, 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 bearish. Literally the exact opposite of what the dollar is doing. The pound, same thing, just a little bit stronger than the euro. We haven't swept the sell side yet, that the euro has already swept. So we got a bullish week at this point, but we also see an immediate rejection at that point. Same with here. So yeah, it's a bit easier to trade with the currencies because they are following the dollar index directly. Same with the USDCAD, bullish prices because of the dollar. Another one that is heavily manipulated is gold. You can see it's doing similar stuff as the indices: bearish, 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 bullish, bullish, bearish. So I don't favor trading gold. I don't favor trading the indices right now because of the crack in the correlation. It also makes, when we go to the T-bond, we can see also we've been bearish throughout. Of course, here we try to be bullish these 2 weeks, which is, I believe, which is why we saw bullish prices on the indices and gold, indices and commodities, I guess. And now we're seeing bearish prices again. Of course, we're still respecting PDRAs, like how we tapped into this 4-hour inversion fair value gap. From that point, pulled here, we tapped into it perfectly on Thursday the 31st and continued seeing lower prices. So let's check the 30-year. I think this is the last thing I will be checking. We swept buy side liquidity and a retracement was reasonable, so that's exactly what we saw in the last I believe 3 weeks. So we've got buy side residing there, which we swept, and we saw a bit of retracement into the range, and we may actually see us retrace even more into this buy side imbalance because we have an order block right to the left of it. So I'd like to see in the next few weeks how the 30-year bond yield would hold looking at this BC. But of course, I'm still expecting higher prices on this, the same way that I'm expecting higher prices on the dollar. So we will be focusing on that buy side liquidity next as our next draw in liquidity. Let's put that out there. So that's our next target, and looking to see how we treat this inefficiency. In any case, that's all I have for now. Good luck and good trading.